What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is August 5th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we're going to be addressing the article that is taking the crypto space by storm, as it's calling for a $5,000 price tag on Ethereum. We're going to be diving into all the details around it, who the author is, what it's calling for, and what standards would need to be met in order to get that $5,000 price tag right after our quick sponsor. So before we kick off the core video, I want to share something that I'm really excited about. I think I found what may very well be one of the first ever self-custodial crypto wallets that's primary focus is security when interacting with Web3, and it's got an incredibly smooth user experience. It's called Block Wallet, and it's perfect for anyone that's looking for a safe and reliable product. I can only describe it as being your own bank, but with Block Wallet as your head of security. They stop you from leaking your IP address on Web3, like a VPN for blockchain. And with Flashbot protection, you can actually save money on each trade you make. You can also protect yourself from phishing attacks, track gas prices, and send crypto without exposing your wallet address. Try it out by connecting to any dApp and enjoy the experience. Block Wallet is available on Chrome or Brave browsers today. Check out the link down below in the description. Alrighty, everyone, so let's go ahead and kick off the conversation here. To just start, I want to go ahead and provide a little bit of context here. This was a recent article published just this morning here from Arthur Hayes titled Max Bidding. And again, Arthur Hayes puts these publications out from time to time. He was the original CEO and founder of BitMEX, one of the biggest derivatives platforms in the crypto space back a couple years ago. And all the while, he is certainly a controversial figure in the crypto space. I always try to, no matter who I'm listening to or learning from, I always try to filter out someone and really try to understand whether or not they're providing substance and they're trying to be truthful in their statements when it comes to what their thoughts are on the market. And whether or not you agree or disagree with Arthur Hayes, his articles are definitely really interesting and cover a lot of macro insights. So I want to take it as that. I want to try to learn from it and try to share my candid thoughts, because I don't agree entirely with the assumptions here. All the while, I think Arthur Hayes, understanding what the Fed might do and how things might go when it comes to Ethereum with the merge, I think his predictions or his estimations for his most optimistic scenario could very well play out. I just don't really agree with the price tag, and we'll talk about that, okay? So first up, I'm glad you guys are here on this video because the article is incredibly long. As you can see, as I just scroll through here, it's a lot to digest for some people. So I'm going to try to break it down so you guys don't have to. So the first thing I want to go ahead and just get right off the bat here is that Arthur generally talks about two key macro events. Obviously, the merge event that a lot of people are starting to get really bullish about and excited about in the crypto space. And then outside of that as well, we've got the potential chance now that inflation is potentially starting to slow down here. We're seeing commodity prices start to go lower. We'll look at some of the charts. That because the Fed potentially might be having a control on inflation and is also seeing a slowdown in the economy, with 2 consecutive quarters of GDP being negative, and of course all the political pundits now changing the definition of what a recession really is. Now we're starting to see a chance where the Fed might start to pivot. They might start going from raising interest rates and tightening the balance sheet to potentially keeping the balance sheet where it is, expanding it potentially, and lowering interest rates or lowering the growth rate of those interest rates, all of which would be very beneficial for stocks and cryptocurrencies. So now that we understand that those are the 2 macro events highlighted, we need to talk about the potential scenarios that Arthur hits on. First up, before we dive into that, what I think he does a really good job of doing, outside of just putting these different kind of scenarios here that we should consider, he does a really good job of going through and talking about how during the last Fed meeting, the Federal Reserve, through the pundit in this case, Jerome Powell, who is the Fed chairman, he basically slipped up a couple of times, as usually a Fed chairman does during these FOMC meetings. They're just human, and the market knows very clearly how to decipher this complex terminology that the Fed propagates. Simply put, Fed Chairman Jay Powell stated something along the lines of this. He had stated that all the while the Federal Reserve in September does have another high rate hike planned in for the federal funds rate, that if the economic data were to speak otherwise, that the economy was starting to slow down, they would not stick to that promise or that goal. That they essentially are going meeting by meeting on determining whether or not they're going to raise interest rates or reduce the balance sheet. They could revert course at any time. And this is a big point that all the while I want to give major credit to Arthur Hayes for pointing this out. We have emphasized a ton here on the channel of a Fed pivot. The sooner that they can get to it here, they're going to do it. The soonest possible that they can feel that they have the ability to pivot, they're going to take that opportunity. And they're doing that because if we take a look here at the market data for the housing sector and a whole range of other things, specifically around mortgage rates, this is kind of the big kicker here. Now I'll go ahead and zoom in a little bit so you guys can see this well. Right now, with mortgage rates being at where they're at now, and he had marked 3% here, the fixed mortgage rate was actually a little bit lower, around the 2% range, essentially speaking, and even sometimes a little bit above 5%. What we've got now is a situation where, because mortgage rates are so amplified, the cost to borrow capital has nearly doubled in the meantime over the last year and a half due to the Fed rate hikes. This has put home buyers in a terrible position where, unless you've got the outright cash to go buy a property, the cost to finance a mortgage has gotten incredibly expensive. Now, not just consuming maybe, for example, 40% of your income in this average scenario, but up to 52%. It is becoming increasingly difficult here with Fed rates at the rate that they're at. Not to mention the slowdown in the economy. So considering those macro elements here and a lot of the other stuff that he talks about, let's go ahead and just go straight into the core substance here. So let's go ahead and dive into these scenarios here. Scenario number one, the most optimistic, would be estimating if the Federal Reserve pivoted on monetary policy and we had a successful Ethereum merge. Not only would Ethereum have a successful network upgrade, but on top of that, the Federal Reserve, rather than being hawkish as it's been for the past year, would start to revert course. It would start to lower the growth rate of increases in interest rates, potentially even keeping them neutral or bringing them back down to bring down the cost of credit in the economy. And they also might, rather than quantitative tightening, which is reducing the balance sheet, might begin quantitative easing. They might start increasing the balance sheet or at least keeping it where it is. This would provide a cushion, a relief to financial assets like crypto and stocks. And having the merge there, it would just add fuel to the fire with a price target of over $5,000. Now, I will share my thoughts on this as we go throughout the video, so stay tuned. I'll get to it in a moment, but I just want to go ahead and lay out all the scenarios here. Scenario number two, no Fed pivot plus a successful Ethereum merge, meaning that the Ethereum network would successfully move to proof of stake, but at the same time, the Federal Reserve would keep course. It wouldn't be lowering the cost of capital. Again, leaving us in kind of a bit of murky waters here. We don't have the Federal Reserve stimulating the markets, but at the same time, we still have a successful Ethereum merge, which would give us an estimated price target of $3,500 for Ethereum, as the supply and demand economics of moving to proof of stake and EIP 1559 on Ethereum would still be beneficial for price. Scenario number three, no Fed pivot and an unsuccessful Ethereum merge, the worst case scenario here, with a price target of around $1,000. Arthur's basically saying that if we get the worst case scenario, a Fed that continues to remain hawkish and stay on course, and yet again another delay for Ethereum, that would bring us down to about $1,000 in price, back down towards the lows we've seen since this bear market has begun. And last but not least, the fourth scenario is the Fed pivot, so the Fed reverting course, but an unsuccessful Ethereum merge. This leaves us with a price target estimation around the levels we're currently at $1,600, with Ethereum not having a successful network upgrade and the Fed starting to provide a bit of cushion for financial assets. Now, we understand our four scenarios here. Finally over to the chart here. And I want to go ahead and just try to map out Arthur Hayes' prediction. The big problem here, I would say, with these price targets, not only are they very wide and very different scenarios, but on top of that as well, we don't really have a deadline for when Arthur is predicting these prices. And to give him a bit of slack, I'm honestly happy he didn't do that, because we have a general estimation of what he's calling for, and he's not calling for an exact price on an exact day. What he's calling for is a few different scenarios where Ethereum can move to over the preceding months, going in probably into Q1 of 2023. And this is a way of mapping that out here. We don't know exactly how the price will look, how it will move, but essentially it's calling for an important catalyst moment here. Either as we move into September here, which really is just a little over a month away here, right, when we're talking about probably sometime in mid-September when they're going to have the network upgrade and also the next FOMC meeting, we are going to have a pivotal moment where we either make an exacerbated move in either direction, depending on these macro events, or if we have that more neutral scenario where we get one or the other, probably somewhere here in the middle. Now, Arthur has these different scenarios here. This is our most optimistic one, the second most optimistic, a more kind of neutral scenario, and then the worst case. This would be if we do not get a Fed pivot and we do not get the merge successfully coming back down here towards the lows, and I would estimate that it happens faster than this. If we get the optimistic scenario, this is what Arthur's calling for. And I think it's why many of you are watching this video now. Big question, can we really get to $5,000 for Ethereum? Guys, look, we've seen that anything is possible in crypto, right? And we're not 100% accurate on making calls on price, so I don't want to derail Arthur for making some calls in the space. And to be honest, he's a very powerful player in this space. He understands a lot of the dynamics of crypto, and he's seen over the past few years just how crazy it can get. But I'm going to be blunt with you all. All the while, I do expect that the Fed will pivot. And yes, even though I expect that there's a very good chance that in September, Ethereum will finally actually deliver, and I see that reflected in the price action. I think that people are getting a degree of confidence now. Considering those things, I don't see us going all the way up to $5,000. Not only would this just be absolutely foreign from what we've seen from previous bear markets, but on top of that as well, I just want to go ahead and just put things into context. Since the lows here, we've already come up around 102% here in price. If we take a look at the previous bear market rallies here, we've had 140% return off of the absolute lows. In the preceding months, we came up 360%, right? All these are great rallies to keep in mind. And yes, some could argue that, hey, this would be a 472% rally, not too far off from those bear market lows, but it's important to understand that we have not pulled back anywhere near this bear market back here in 2018. Not to mention that, as we can see here, because of that dynamic, we were still incredibly far away from the previous highs. Still, if we think about it in percentage terms, roughly 75% down from the previous all-time highs. What this is calling for is for us to return all the way back up, not only to the previous all-time highs, but to set new all-time highs. And while the Federal Reserve might slow the growth rate of interest rate hikes, they might not touch the balance sheet anymore, right? They are not going to completely flip course unless there's some catalyst event in the macro environment. And who knows, something like that could happen. But I have to say, after going through all that we've gone through over the past few years, that's a pretty big bet to expect another kind of black swan or major event like that, right? So an important dynamic to understand here is that it's very difficult to think. It would be very difficult for Ethereum to kind of pull this move. I think the realistic scenario here that we should keep in mind is somewhere between this green line here and this white line. But I'm going to go ahead and say something that's actually quite exciting here. That means we're calling for probably a $2,200 price tag on Ethereum. And while that's phenomenal, right, to get something in this range, 22 to 2300, I think it's going to happen in a much shorter time frame, right? And this is where really my disagreement with Arthur comes in. He believes essentially, and I usually agree with this point, I'll get to it with a little bit of context. He believes essentially that you can't price in the merge, right? It's going to happen when it happens, and it's only going to start to reflect on the day that it's actually implemented due to its change on the supply and demand economics. And I 100% agree with him. It's exactly like the halving events. I've tried to explain that to so many people. But the big point I want to bring up here is that even though Ethereum may become deflationary, even though it might start to have a net reduction of its supply, there is nowhere near the kind of optimism, nor will there be the sustained optimism, to be buying Ethereum and Bitcoin during this macro environment, during a risk-off period of time. And this is the kind of euphoria that I see a lot of people get caught up in during bear markets, right? So if we take a look here at the NASDAQ 100, right, we've been calling for a relief rally for some time here on the channel with our price target of around 13,500. And I don't know if it's going to get shot down exactly there at that price range, today or early next week. But I will say something here, which is that I'm not getting incredibly optimistic after equity markets have rallied 20%. I'm not looking to go all in on Ethereum when it's at $1,600, when it was just $800 back about a month and a half ago. In fact, this is the range where, while I may still be holding positions, I'm slowly taking profits along the way. And I'll look to be buying into weakness in the market. Problem that people get caught up in is expecting things to happen too quick. They expect that just because the Fed may pivot or Ethereum might go through this technological upgrade, they'll make it deflationary. The same kind of hopes that rode us during the last bull market, that during a bear market we can just reverse tune, we can just get back to the good times. Unfortunately, that's not how bear markets are formed. And no matter if we've got some volatility, even if we go to 2,300, which I think is wholeheartedly reasonable to predict, especially if we get those two net positives of the merge and the Fed, it's not going to be a catalyst for us to climb all the way back to 5,000. I just think it's not practical here, guys. And I'm always going to do my best to be as honest and genuine with you guys about estimations here. And right, we've been calling it again as we've been holding on this line of resistance as new support, right? I think we can come up to here, right around 0.76 here on Ethereum, test around this range. But I really don't see us pressing up towards new all-time highs here for the E to BTC ratio. That's a very big ask here to be going up another 26 to 27% here for Ethereum against Bitcoin, not to mention Bitcoin will probably be moving up during that time as well, as we're probably going to be testing up here towards the previous consolidation range. It's a very, very big ask here to consider. Now, again, I believe more than anyone, as much as the next guy, again, we've been hitting on this point for the past month here, as everyone's been very, very bearish, that the Fed will pivot when it gets the opportunity. And take a look at all the things that the Fed is watching. You got crude oil collapsing down to the lowest levels we've seen since back here in February of 2022. A clear market reversal pattern here. If we just take a look at the long-term time frame here, this is not something to be really bullish about here. Maybe if we find support at this range, right? Again, natural gas, double top here, clear rejection at around 950. You've got lumber here, one of the big commodities of the housing market, collapsing down to its low range, looking like it's ready to break an over 2-year-long support range here and go down into normal territory that it's been in back here before the pandemic. Take a look at wheat futures, month by month here, having severe double-digit or high single-digit declines here in price, topping out at a similar range back from 2008. This looks like a repeat of history here. And we can take a look at the other gauges here that prove through the treasury markets that the treasury markets are calling BS on the Fed's hawkishness and confidence of raising interest rates. Take a look at that 30-year yield. Right? The bond markets are incredibly efficient. If the bond yields are going down, this is calling the Fed's bluff that they're going to be so hawkish and raise rates so aggressively. And they've been doing this since back in June. This was our telltale sign for that relief rally to begin here in the market. That's why we flipped short-term bullish here to take advantage of those rides. Even though we think we're still in a prolonged bear market, this could start to reverse here in the coming months, right? We could whipsaw back higher here going into the fall. And the same could be for all those commodities we took a look at. Oil could also do the exact same and drive us back into inflation. And the reason why is because the Federal Reserve will start to get too cocky. They will start to slow down on their hawkishness. They're going to start to pivot exactly as Arthur hits on. And that is going to be all the signs we need to know that the Fed will not be able to control inflation. It will come roaring back sooner than you think because we haven't put the economy into a proper recession. We haven't gone through the necessary pain we need in order to have a long-term effect and rekindle the balance between supply and demand in the economy. And that is unfortunately where the Fed continuously is short-sighted. And you need not look further than the 1970s to the early 1980s, where inflation went through multiple waves, right? It went through a variety of waves of double-digit growth and inflation coming back down, looking like the Fed had control, and then it spiking back up. I really don't think this is enough to sustain a revisit. It could potentially bring us back to the all-time highs. It depends on how quick the market starts to correct and the Fed's pivoting. But essentially speaking, I think we need to keep our sights a bit more conservative. Somewhere in this ballpark makes sense for me on Ethereum. Its range still would be a range low from the previous highs if we get something in this range versus something all the way up here. I just don't think you're going to be getting that in this macro environment. And again, I agree with the optimistic scenario. I think there's a good chance that we get either one of them, or potentially the most optimistic scenario of the merge and the Fed pivot. But I'd like to know what you guys think down below in the comments. Leave a comment down below what your thoughts are. And most importantly, if you guys can, consider liking this video. It's a great way to support the channel. But until the next one, everyone, thank you all so much for watching, and I'll see you all in the next one. Take care, everyone.